Hey, greetings. Good afternoon. Today is Sunday, 23rd day of August, 2020. Now, what we're going to do here real quick is we're going to run through a checklist for anybody who's a new member. Maybe you're on the trial. First thing first, Telegram. If you're watching this video, hopefully you already have Telegram installed, and that's how you're watching it, is via Telegram. Possibly you're watching this on YouTube. So if you don't have Telegram installed yet, just do this. Telegram.org. Okay, let me show you what that looks like. Telegram.org takes you to this page. If you have an Android phone, if you have an iPhone or an iPad, if you have a PC, or if you have a Mac OS or an Apple computer. Now, I have it on my phone, on my iPad, and on my PC. That works best for me because I have lots and lots of traders all over the world, and everybody has different questions at different times of the day or night. So I want to always be connected. Maybe you're not quite so rabid. Maybe you don't want to always be connected. But here's the thing. If you have it on your phone and you're worried about being woken up in the middle of the night, when I'm sending out alerts to our traders on the other side of the pond, all you got to do is just turn off notifications. And then when you wake up the next morning and you're ready to go back to trading, turn notifications on. Now, the reason Telegram is so important, and let me show you, is because that's where we do just about everything. Okay? We even have a channel just for shooting the breeze, CFRN Breeze. Now, there's a bunch of historical channels where you can go back and see what was happening a year ago, 2 years ago. There's our original beta test for the LOGIC247. Now, here's where you'll spend a lot of time. Tonight, we begin week 108. This is where you post questions, and you can scroll up for months and months and months, and you'll see posts and charts from myself, from other traders, questions about the methodology, you name it. There's a question, there's a chart, there's a discussion. So anytime you need to fill your time, just go to the alert trial discussion group, scroll to your heart's content. Okay, here's helping one of our traders get a new computer. You'll find everything here, okay, that is trading related. The first channel I showed you, the breeze, that's when you want to shoot the breeze about something other than trading. And I thought this was funny. Me being prepared for 2020, whole armor of God. This is actually 2020. Okay. Now, you'll also have access to all of our pre-market videos every morning before the market opens, 9 a.m. Eastern. We do about a 30-minute live session, and you're going to use the link and the password that you get in the email for the week, which also has your weekly trading zones. We'll get to that in a minute. You'll have access to your concierge trade alerts here. You'll have access to a lot, okay? Everything we do. So, number one on your list, get Telegram installed. It's free, it's fast, it's secure. There's no advertisements. Okay, now, number two, what platform are you going to use? In the email that Valerie sent you, there is a link that will allow you to take a trial of the platform that we use. Form and indicators. When you install our platform, which looks like this, it's very, very simple. Not a lot of bells and whistles, but our methodology doesn't use any bells and whistles. What you see right here, this allows us to navigate the markets. And the reason getting the indicators on a chart in front of you are so important, well, I'll just show you here while I'm on this chart. What popped up just now is the British pound. And you might say, well, I don't trade the British pound. That's okay. We use the same trading methodology to trade the S&P and the Dow and the Russell, NQ, gold, crude, even the British pound, euro, Mexican peso. This green indicator, that's called the BBC. All right, what does that mean? Bull, bear, cross. What does that mean? When price crosses below this green line, okay, we become bearish. In other words, we're just looking for lower prices. Okay, that's below the green line. Now, look what happens when price gets above the green line. We get a leg, we get a retracement, and then the continuation of the leg takes us back above the BBC. That's a bearish cross, that's a bullish cross, and once we have a bullish cross, we anticipate higher prices. And then when we get a bearish cross like this, we anticipate lower prices. So you're probably wondering, well, when price gets below, looks like that red line gets below, or that blue line gets above. Correct. You see how price here starts closing below the green line? That's sort of a heads up as to what's coming. Now, this red and blue indicator has a technical name. It's called the CFMA1. But that doesn't tell you a lot. I refer to it as red and falling and blue and climbing. So when this red line crosses below the BBC, we call that a bearish cross. Okay? Bearish cross. When that happens, this is price telling us we're about to head lower. But this actual cross here of these two indicators, that's like confirmation. And then over here, when we have the opposite of that, I'm sure you already figured it out. That's a bullish cross. Okay. Now, just these two things alone are pretty powerful tools. Everything we do is fluid across all markets, all time frames. So just because I'm showing you this on the British pound, don't, well, that doesn't apply to me. It does. Because auction style markets, which is what all of these futures markets are, and by auction style, I simply mean you've got buyers on the bid, sellers on the ask, and prices channeling back and forth. Okay. Now, when order flow, which is this is what moves price. Now, the markets are closed right now, so this doesn't look too exciting. It's not moving, but the markets will open here in about an hour. 6 p.m. Eastern, Globex session starts. So I'm trying to get you ready for that. Okay. These are buyers. These are sellers. Once the markets open, these numbers will increase greatly. Okay. Indicators don't move the market. Algorithms don't move the market. The only thing that moves price higher or lower are the actions of these folks here. Okay. Now you'll read different stuff on the internet. I'm just cutting to the chase, giving you the truth about trading. Order flow is what controls price in the market. And There's something unknowable here. The unknowable is at any time, a institutional buyer could step in with 1,000, 5,000, 10,000 contracts on the bid. Same could happen on this side. So we don't know what's going to happen next, nor does anyone else. Now, I know lots of websites promise you they know what's going to happen next with certainty, but the truth of the matter is they don't. If you've read Genesis, when God created Adam, he gave him a lot of abilities, but one ability he left out, and I think it was intentional. He did not give Adam the ability to change the past or to know the future. Now, those two things are inextricably linked for eternity. So if you can't know the future, what can you know? You can know what the next high probability move is. Now, price will go sideways for a bit. That's called consolidation. And when our two indicators here that we're talking about lay flat and price goes above the BBC and then below, then above, then below, that is not when you want to be in the market. This is where those last couple of great days or great weeks or great months evaporate when people try to trade this. What you want to see is you want to see price not only cross below, you want to see it pull away from the BBC. Now, price always reverts to the mean. What that means is price will always pull back to the BBC. Now, no matter what methodology or system or strategy you're using, price always reverts to the mean. It just happens that our mean is green. And so we see as price pulls back to it, it gives us a down close or a red candle. Remember, our first indication was here and here. It got confirmed here. We pull away, we pull back. Now we're ready to sell the market short. Okay? And what a beautiful move. When price gets as low as it can go, that's called support. You see up here, when price could go no higher, that's resistance. In other words, no buyers who are currently trading were willing to pay more than 1.3269. As we come down here, what happened? Sellers took the ball up here. When buyers showed they weren't willing to pay higher prices, sellers took the ball, ran it downfield. And this is where they ran into a bevy of buyers who were very much willing to pay this price. So that gave us a leg that took us back above the BBC. And this is how markets work. You'll notice up here, leg, retrace, leg, right? Over here, leg, retrace, leg. When price pulls back to the BBC, it holds more often than it doesn't, okay? There will be times when it doesn't hold, otherwise we'd have a stagnant sideways market. So here, when we get our bullish cross and we pull away, and then we pull back, this pullback held. It held because we didn't take out this swing low. Now, once price takes out this swing high, okay, you could start getting along here, but this little red and falling, that represents potential resistance. So the best thing to do is let price just get a bit above that. And as you take out this swing high, you're off to the races. Now, we know that price will continue higher. We're above the BBC. We've got the support of blue and climbing. Now, we know that price will continue to move higher. See, these are the things you can know, right? As long as we're above the BBC, we know the next high probability move is to the upside until price runs into resistance. How could we know that price was going to run out of steam right here? There you go. Now, on this drop, how could we know that price is going to find support? Now, bearish cross, the bullish cross, the bearish cross, to potentially a bullish cross when the market's open tonight. We'll find out. If we get the bullish cross and hold the pullback like we did here, we'll make another run to the upside. Now, right here at this bearish cross, that potentially may be good resistance. In most cases, it will be. So if we do get the bullish cross, if we do hold the pullback and we take off, once we get into this area, you want to take profit and or get your stop loss real tight. Okay. So we've covered the platform, just a real basic introduction to the indicators. But now remember, everything we do is very, very simple. It's not like anything you've tried to do before. You're not going to have to memorize a million different things. And nothing is subjective. Everything here is completely logical. And as the week progresses, the weeks progress, I'll be teaching you more and more in group settings, in one-on-one settings, because as a member, you have unlimited access to one-on-one mentoring sessions, which takes me to the next stop here on our checklist. Platform and indicators. Contact Valerie if you don't already have the information. Get a hold of her at 949-423-6464 or support at cfrn.net or in Telegram. Search CFRN Client Services, and that will take you to the support desk in Telegram. So you've got Telegram running so that we're in communication at all times, basically around the clock. The help desk is monitored 24/7. Okay? Phone number during normal business hours. Email about 18 hours out of the day. So you got to get Telegram up and running, because this is where you're also going to get to the most important thing you're going to get here. Two things, actually. Session group and alerts. Telegram. That's where you'll get. That's where you'll have access to the discussion group, so you can ask me questions, you can ask other traders questions, you can ask Michael and Valerie, and anytime you want to send a private message, just click on my name or picture, okay, and it becomes a private message as opposed to a group message. Asking questions to the group is always a good idea, because you'll not only get my input, but you'll get the input of other traders who have learned the very same methodology and strategy that you're getting ready to learn yourself. Okay. Now, this platform and these indicators, if you're on the trial or if you're brand new, you'll have this for, you'll have the platform for a couple of weeks, and then you've got to decide what platform you're going to trade on. Our indicators run on Ninja and a host of other platforms as well. I like teaching our new traders on this platform simply because it's such a simple to learn and easy to use type platform. Okay. Now, on our checklist, number 3. Monday morning at 6:15 a.m. Eastern. Ha. Oh. You're going to get an email. In that email will be the link and the password to the live training room. That link and that password will serve you all week, okay? Also, in that email will be the weekly trading zones. As soon as we open the room in the morning at 9:30, now I'm going to open at 9 for the pre-market strategy session, and then we open at the Wall Street Open. But keep in mind, we start trading tonight at 6 p.m. Eastern, okay, in Telegram. So Monday morning, 6:15 a.m., you're going to get an email with the link and the password to the live training room. Use the same link, same password all week. You're also going to have our weekly trading zones. There is a FAQ video. Watch all. There's only 4 or 5 of them, I think, but it covers the weekly trading zones in depth. And once we publish them on Monday morning, and we've published them since December 14th of 2009, once we publish them and you put them on your charts, they don't change for the whole week. Okay. Now, let me just show you why these are very important. When you get them in the morning, it's going to be a string of numbers that's not going to make any sense. But Michael will show you, using a little app that we have, how to copy and paste that string of numbers into the app, and then the app will paint these weekly zones on your chart. Okay, so let's jump over to the ES. All right, now let's back up to August 16th. That's what we're looking for. Why August 16th? August 16th was last Sunday night. That was last Sunday night, and then Monday. Okay. The opening candle last Sunday night was right here. Okay. 6 p.m. Eastern on August 16th. Price made a beeline for the zone overhead. When price approaches a weekly zone from below, we expect it to be resistance. Remember what I said about resistance. When price can go no higher, it will turn around and go look for support. And you can see where it found support at the weekly zone. When price finds support and can't go any lower, it will reverse and go look for, yeah, you're starting to get it, resistance, right? Now, we have a little battle taking place. Consolidation, it's called. This is a little game of push and pull between buyers and sellers to see who's more committed to their position. If buyers are more committed, we're eventually going to make it above that zone. If sellers are more committed, then we're going to go back to the zone below. All right. So price, after consolidating for quite a number of hours, these are, excuse me, 30-minute candles. Price gets above the zone and consolidates for 1, 2, 3, 4, 5, 6, 7, about 8 hours. All right. Then we get a move, but it doesn't take us all the way to the zone overhead. In other words, price ran into resistance. Okay. We took out these swing highs, but there wasn't quite enough gusto to get us all the way to the next zone overhead. So when price finds resistance, it'll go look for support, which it found at the zone. Now I believe I said only 3 things can happen at a weekly trading zone. The most likely is consolidation. Second most likely is rejection. You see how when this 30-minute candle closed, the only thing left touching the zone is the wick. That's rejection. Now the third and least likely thing to happen is called a slice. You see how price came down, consolidated, higher, put in just a slightly higher high. Whenever you get a slightly higher high, be very suspicious, because look what happened. Now, here price sliced through the zone like it wasn't even there. But look where it found support, at the zone. You're starting to see the theme here of the connective tissue. When price slices through a zone and runs out of steam, it will typically reverse back to the zone it sliced through, and then typically it will continue in the direction of the slice. This time, it did not continue in the direction of the slice. So even though that was the next high probability thing, it didn't happen. See, if the next high probability thing always happened, then that would be the same as knowing the future with certainty, and we already covered. No man, no machine, no algorithm, not nothing, not nobody, not no way, not no how. Knows the future with certainty. Okay? But you can become very, very good at knowing what the next high probability move is. Now, we had an alert here to be long 33.84, ran up to 88.75. So that's a nice 4 3/4 point trade. Price then gets back below the trigger, triggers again, back below the trigger, triggers again, back below the trigger, it triggers again. When you receive the Concierge trade alerts tonight, remember these numbers are good for the entire session. When they trigger, you should anticipate that they will trigger more than one time. Occasionally, we'll have a really strong directional day where we don't see multiple triggers, but more often than not, these Concierge trade alerts will trigger more than once. As long as price is above this zone, we believe it's trying to get to this zone. When price gets below this zone, we believe it's trying to get to the zone below. You see how it turned at the zone, turned at the zone, turned at the zone, turned at the zone. And multiple triggers finally touched the zone at 33.96. All-time historic highs, 96.50. Now, down here, look what happened. We had an alert. Well, first we had an alert to sell 33.79, which took us to the zone below. And then we had an alert to be short 33.61, which took us where? Down to the zone, where it found support. And then it got back above the zone, back above the trigger. Resistance here, triggers the second time. Support sends us looking for resistance. Resistance, back to support. Support, back to resistance, and this time we overcame that resistance and made it to the next zone where we consolidated and then launched for the zone overhead again. Price ran into resistance and couldn't quite make it all the way to the zone. This time, what did it do? Back to the zone. Consolidation, support gave way, down we drop. 1, 2 triggers. Support. This candlestick tells us to look for a move to the upside, leg, and a retracement, and a leg. Could it be any simpler? Yeah, I'm glad you asked. It can. Now, I said price is always looking for a weekly trading zone. Question is which one is it trying to get to right now? If price is above the BBC, you know it's trying to get to the zone overhead. If price is below, you know it's trying to get to the zone below. And when you're below the BBC, you want red and falling. And as long as price stays on the left side of red and falling, there's no reason in the world for you to get out of a perfectly good trade. I'll teach you how to read this chart, how to determine when you have an exit signal. Okay. See this nice move up here from 33.80 up to 93, about a 13-point move. Now, getting out of swing highs and swing lows, that's just luck, because you don't know it's a swing high or swing low till after the fact. When this step line, this little black line, gets on the right side of blue and climbing, on a long trade, you're looking for the first red candle that closes below the step line. And that's the market telling you to get out, because this is potentially coming. And it did. In the very first little pattern I showed you on that pound chart, you see, we get a bearish cross. Price pulls down to the zone, finds support, bounces up to the BBC where we expect it to find resistance. And then that takes us down through the zone, down to the zone below where we find support. And then there's that same pattern, leg, retrace to the BBC, and up we go. And there's the exit signal. Interestingly enough, this last leg up on the 30-minute chart on Friday, the final candle, gave us the exit signal. So being long this move, the chart says to get out at 33.91 and a half. Okay. Now, here's a big picture look at the S&P. Same indicators. When we move from one market to the other, S&P to Dow to Russell to NQ, gold, crude, you name it, wherever we go, and even whatever time frame we use, we don't change the indicators, we don't change the strategy, we don't change anything, because the markets are fractal in nature. What happens on a 1-minute chart happens on a daily chart. It's just at a different scale. This was an all-time historic high. Remember, we're on a daily chart. All-time historic high in the S&P. Couldn't go any higher. Went looking for support. Found it at the BBC. Put in a new all-time historic high. Couldn't go any higher. We pulled back to the BBC, and this time it didn't hold. We gapped lower on the open, and that became the pandemic crash. The price could go no lower. It went looking for, or support, it went looking for resistance. Pull back off the resistance to blue and climbing. Got us back above the BBC. Leg, retrace, leg, retrace, leg, retrace, leg. Right up to resistance where we expected it. Back to the BBC. Right on up to where we are right now. All-time historic high. Yes, those are the puppies. All right. All-time historic high, 33.96 and a half. And the swing high on Friday was 96 and a quarter. So we came within one tick of the all-time historic high. So what does it look like is going to happen tonight? Well, we won't get into that just yet. We'll get into that tonight when Globex opens, because we only got about 40 minutes now until the open. Look for price. If it doesn't gap and run to the upside, look for a pullback to the BBC, which we expect to hold. Then we'll have an alert in the channel, okay, to take you up to this zone. Now, let me show you the alert channel for a second, so you'll know what you're looking for there. You're going to get two types of alerts. The first one is the Concierge trade alerts. These are based on historic price action. So Thursday night, all of our traders went to their S&P chart and put in a line at 34.01. They put in another line at 33.69. On the Dow, 2 lines. All the markets that you trade, and those numbers are good for the entire session. Now, you get this report once per session, shortly after the Globex open. I was running late Thursday night. Those are based on historic price action. The other type of alerts, the LOGIC247 alerts, okay, those look like this. Last week, week 107, let me straighten this out. Okay. Last week was week 107. Now, this is not Concierge, this is Logic. Concierge is based on historic price action. Logic is based on current price action. When they both point at the same important price, important area, that's your highest probability, lowest risk trade setup. Okay? We issued a total of 100 logic alerts. They come out around the clock. You might get it at 2 a.m. or 2 p.m. Okay? It's just whenever opportunity presents itself. 31 of them never triggered. We were left with 69 actionable alerts. 15 of those were stopped out. And so that's 22% of actionable alerts stopped out last week. Now, for the last 107 weeks, what we've averaged is 20%. The previous week, let me just scroll up real quick to show you the previous week. Now, these are all alerts that came out last week. I might as well slow down. Thumbs up means price got to the target. Z's means it never triggered. And when you see a red X, that means it got stopped out. Now, we don't want to risk more than $300 per contract per trade. Less when possible. Your stop loss is determined by market structure. I teach all of our members a very simple 3-step methodology that tells you where the stop loss needs to be in order to honor current market structure. Okay, still scrolling through last week. Well, there was 100 alerts, so we're almost there. Here we go. Now, week 106, we had 93 alerts, 67 actionable, 8 were stopped out, 12% stopped. There was 12% of actionable alerts stopped out. That's based on not risking more than $300 per contract per trade, less when possible. So this was an unusual week, only 12%. Last week was 22%. The average over the last 107 weeks has been 20%. So week 107, the first alert out of the gate last Sunday night, now this is Pacific time, which is what I'm on. Telegram will reflect whatever time zone you're in based upon the clock on your computer. So the first alert last week was to buy gold at 1961. Initial target was 1963. Second target was 1964. Next target was 1968. So we had 1, 2, 3, 4 targets. On this move, we made it as high as 1968.50. So from 61 to 68.50, that's a $750 per contract trade. Crude was stepped out. Dow found the target. Russell stopped out. NQ found the target. Yeah, it was a rough Sunday night. Let me be honest with you. S&P stopped out. S&P found the target. No trigger. No trigger. British pound. Euro. Silver. S&P. Dow, no trigger. NQ found a target. No trigger. Gold found the target. Dow found the target. Crude oil, no trigger. S&P stopped out. Dow found the trigger. So what do these letters mean? B is buy. T is initial target. On a long, you'll see the second target, and I call that potential resistance. Third target, again, potential resistance. And the final trade to target on every alert. On a long, it's going to be the weekly trading zone overhead. On a short, it's going to be the weekly trading zone below. Buy, initial target, buy, initial target. Sometimes there's only one target. NQ, buy, initial target. Crude, buy, just one target. This goal got stopped out. silver. Now, we just went through Sunday and Monday, the 16th and the 17th. This is Tuesday. Okay, you have access to all this data because you either just became a member or you're already on the trial. I just wanted you to understand what they look like, how to read them, so that tonight, when the alerts start flowing in the channel, you'll understand what's actually going on. Okay? All right, so we've covered Telegram, platform and indicators. Monday morning, you'll get an email with a link and a password to the live training room and the weekly trading zones. Watch all the FAQ videos. Valerie makes those available in the channel in Telegram. Number 5, live training. Live training, 9:30 to 11:30 a.m. Eastern, Monday through Friday. Every day you get 2 hours of group training in real markets, live markets, real-time data, taking off trades, while you watch, ask questions, and follow along in the simulator. So that's 10 hours of group training every week. And you're encouraged to ask as many questions as you possibly can so that we can answer them in a dynamic market with flowing prices. Number 6, 36. Afternoon broadcast. Okay. That goes from 12 noon, 2 p.m. Again, you're encouraged to ask questions. Michael will do a recap of everything that happened in the live training room. I'll recap all of the Concierge trade alerts, all of the LOGIC247 alerts. Okay. So really what that amounts to is you got 2 hours in the morning, 2 hours in the afternoon. So that's 20 hours a week of live training. But wait, there's more. Thursday night. Members only. Members only workshop. 9-11 p.m. Eastern. Great. This is the one you're not going to find anywhere else. I know some places promise it, but we actually do it. Ask our members in the discussion group. They'll tell you we do it. Okay. Unlimited. One on. You have somebody that can spell, right? One-on-one mentoring. Each one-on-one mentoring session is 45 minutes. You can check with Valerie. She'll show you how to book the session. She'll help you book the first one. 45 minutes with just you and I. 45 minutes with just you and Michael. We do a screen share go-to meeting. So you're able to see our charts. If you want us to look at your charts to help you troubleshoot something, we can flip it around and do it that way as well. So you have all that group training, but if you're new, you should immediately book at least one, if not two, one-on-one mentoring sessions. Your first week, even your second week, and then as you need help, okay? Because our methodology and strategy is so simple, it doesn't take a lot of time to teach you, but we make ourselves available. All you have to do, pick a day, pick a time that works with your schedule. It matches the schedule I have posted or whatever Michael's schedule is. We meet with you. We record the session. So be ready with the list of questions. And we'll go through the charts. If you've been trading in the simulator, we'll go over the different trades that you've taken. the ones that worked out, the ones that didn't work out. We'll talk about anything you might have missed, or if market conditions just weren't conducive for trading at the time you put that trade on. And we'll teach you over the coming weeks how to read the chart, how to know when the market is not conducive to put on a trade. No position is a valid position. However, you won't be at a lack for opportunities, because as I just showed you from last week, here, let me fix this. I already fixed it on one of them. Let me fix this one too. Now again, you can go in and you can look at every one of these alerts, so you really start to understand the flow. Now with 69 actionable alerts, 15 of them getting stopped out, that's 54 opportunities last week to get your goal for the day. That's more than 10 a day. Now, you'll also get what's called the 2420 blueprint. This is designed to help you go from 1 to 20 contracts over a period of 24 months. That's in a perfect world. Probably take you longer. Okay. Now, if you're trading the S&P, let's use this as an example. You have a goal of 2 points a day. $100. Not a big deal, right? The way the blueprint works, it's going to start you out in the simulator. Your goal is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you do that, the blueprint will give you the green light to go live with one contract. The idea is to prove to yourself and to us that you actually understand the methodology. So there's no monetary risk until you go live. Okay. Once you go live with one contract, then the goal is to increase your account balance, the one with real money in it, $2,000. Once you accomplish that, the blueprint will tell you to add your second contract. Now, once you add the second contract, everything changes. Why? Well, because your first contract was put on with your savings, money under your mattress. But starting with the second contract and every one after, when the blueprint says add number 3, number 4, number 5, number 10, you're always adding the second contract or the next contract. It starts with number 2 with profit you earned in the market. Now, I can't promise you'll never blow up another account. However, if you follow the blueprint, follow the rules, it would be really hard. Because anytime you have 2 days back to back where you don't reach your goal in 10 trades or less, then the blueprint's going to put you back in the simulator so that you can have a mentoring session and we can figure out what the heck's going on, get you back on the right track, and then you go back into the live account again. You don't have to start at 1 all over. You pick up where you left off. So the second contract, the third contract, every contract always added with profit that you've earned in the market. So up here, goal 2 points a day with one contract. for bucks. Now, if we use those same 2 points, by the time you've earned the right, one step at a time, by the time you've earned the right to trade 10 contracts, the same 2 points that make you 100 a day, the same 2 points can now make you $1,000 a day. Most traders fall to the temptation, if they have the money, to just jump in and trade 10 contracts because, man, it looks simple. It can't be that hard, right? Well, once you've gone up a few accounts, you'll realize that, yeah, it actually can be. So resist the temptation. Can't stress it enough. Resist the temptation. Okay. Number 1, telegram.org. Number 2, platform and indicators. Number 3, get your email with the link and the password to the live room. Watch all the FAQ videos. Be in the room. Now the room will open. Room will open at 9 a.m. for pre-market strategy session. Okay? This is where we determine if we're about to have a bullish session, a bearish session. What does the chart tell us? What does price tell us? What help are the indicators giving us? We then identify prices on the upside and prices on the downside that will be key areas, key prices that the market will try to get through during the course of that session. We have quite a library of pre-market strategy sessions, so anytime you have free time, jump in and check some of those out. We take a 30-minute break at 11:30 a.m. Eastern. We come back for the afternoon broadcast. So you've got 20 hours a week there of live training. Thursday night workshop, unlimited one-on-one mentoring, 24/20 blueprint. That's going to help you write your business plan, your trading plan, and it's designed to help you go from 1 to 20 contracts. If you're focusing just on the S&P and just taking 2 points a day out of the market with one contract, that's $100. Same 2 points. Once you earn the right to trade 10, that's $1,000. Okay, but if you just jump up and try to do this because it looks simple, you will lose, unfortunately, all of your money. It happens again and again and again. Now, I use this disclaimer on the radio, but it'll work for this. Everything I've discussed here tonight is about how to use a methodology, how to use a strategy, all the tools that are available, all the help that's available. But you've got to remember, trading is risky. It is not suitable for all people. You can lose all of your money and then some. You should always consult with a licensed investment professional. I have medical professional when we were talking about a lot of those vaccine stocks. Before making any investment decision, and always trade with a hard stop loss. If you're not using a hard stop loss, you're not even trading. It's just gambling. Okay? All right. I got to get ready for the Globex Open, which is now in just 20 minutes, 6 p.m. Eastern. I'll see you there. I'll get this rendered. I'll get it posted. Work your way through it. If you have any questions about anything, contact Valerie or ask a question in the discussion group or send me a private message in Telegram. Now, if you call, you'll always get a return call or you'll speak to someone live. If you send an email, you'll always get a response. If you contact us in Telegram, you'll probably get a response within about 5 minutes. No guarantee, but most times. Okay? All right. Well, we're glad to have you with us. Glad to have you as a part of the family. Whether you're on a trial or whether you're brand new with us as a member, we will do everything that we can to help you reach your goal as a trader But remember this, trading is not easy, but it can be simple. I'll see you tonight on the Globex Open.